Good evening, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading's Miami office down in sunny South Florida. Today's date is Wednesday, October the 16th, 2013, and here is today's After the Bell Market Summary video brought to you by WallStreetTrading.com. If you have not been to the website yet, go check it out. There's a lot of free educational information on the site. At the same time, if you're interested in joining our prop firm or taking our educational courses, you can contact me at ccooper at wallstreettrading.com or use the contact us button at the upper right hand side of the home page or any other page that you go to on the website. Aside from that, let's go ahead and take a look at the analysis here for the market, how the market closed out the session today. The Dow closed up 205 points, the Nasdaq closed up 45 points, the S&P 500 closed up 23.5 points. If we take a look at the breadth on the market, we had 4,913 issues advancing on the NYSE, Nasdaq, and the Amex. We had 1,439 issues declining on the NYSE, Nasdaq, and the Amex. Therefore, you can definitely see that breadth was in favor of the bulls today, close to a 4-to-1 there. If we take a look at the issues making new highs, we had 716 issues making new highs in the NYSE, Nasdaq, and the Amex. We had 67 issues making new lows in the NYSE, Nasdaq, and the Amex. So you can definitely see that, again, breadth was in favor of the bulls today, as we have not yet come up with a deal for the whole government shutdown fiasco, but there are buyers in the market, as we could definitely count on the markets most likely making a move higher if they do come up with some type of deal, because everything that has been going thrown at the market without negative, without some of the data not being released because the government shut down from the delays and the extensions, the market just continues to chug higher. That's kind of telling you that the market's ignoring everything that's going on and just people want to buy. I'm not sure if this would be considered euphoric buying right now. I do have some other guys out there that are saying that they're calling this euphoric buying, but um, you know, all I know is that these guys are buying it up. So you gotta just stick with the trend, stick with the strong stocks, and you should be able to do fine as long as you're trading those stocks that are going, following the trend of the market. You should be doing all right. So let's go and take a look at the market. The SPY, which is the S&P 500 ETF, up $2.37 today, up close to 1.5%, closing at 172.07. You can see we did break above. We did close down yesterday. Today we had a gap up that was bought. It was a gap and go day, and they broke us above this 171 level. Next target we have in the market is this little gap window area, gap window resistance, and that comes in around, say, let's see here. That's going to be coming in on the SPY around 172.76, and then the breakout trigger long for that gap fill trigger is around 172.32. So if we break and hold above 172.32, you can look for that 172.76 gap fill. We break above that, then we have the all-time highs on the docket around 173.53. As long as we can hold above 171 going forward, I think we should trade sideways to higher. Where does that 171 level come from? That 171 level comes from the little pivot that we had right here before we had this little downdraft back in August, and this little move right back up. So keep an eye on that. If we break above that level, we have this little key trend line that we're going to be watching, all right, which comes from this little high right there on the left to the high that we made right there in the middle of the screen to the high that we made a couple weeks back right here. So that target would be towards the top of the channel, say around 175 or so. Let's go ahead and take a quick look at the ES, see what action we got going on here. Even on the ES is making its way, of course, back up towards those highs, just like the SPY. Except you can see a little bit more action on this chart since it trades on a 24-hour period. And therefore, you can see we're above 1705. And then resistance level on the ES is around 1720. We break past 1720, these highs that we have right here coming in around, let's see, 1727 or so will be the next on the radar. But everything's looking back again, especially since we had sold off yesterday and closed near the lows, and today we had a gap and go action on the markets. You can see the gap. You can't really, of course, you don't see the gap and go on the ES there, but you can see the gap and go on the S&P 500 here. All right, we closed right here and we opened up right here. So pretty much everybody that was short yesterday, or they were short the market, or if they were a long volatility, they had to reverse those positions and take the trade, the trend with the market. That trade right there. Which, taking a look at the VIX was down close to $4 today. It was down 21%, and it looks like it wants to make its way back down towards this $12 13.50 area, the little pocket we've been watching. Again, once again, the VIX does not fail. Every time it tries to break above 13, okay, it just gets smacked right back down. And this is just a bullish year. They're just buying the market up. So again, you want to make sure you're in the right sectors and make sure that you're in those sectors that have opportunity to move higher in the coming months, coming weeks. Some of the sectors that are hot or been rising up for they've been moving up since the start of the year. Those are the sectors that you want to, if you've been trading those sectors, maybe take off some profit and move some money to some of these other sectors that have a chance to move higher going forward, such as the basic material sectors, which we've been talking about. Which, funny thing, CNBC, Fast Money, they're now talking about they're interested in basic material stocks, and I've been talking about that for the past 3 weeks. So again, make sure you share these videos. We do a lot of great analysis here. Make sure you share the videos and watch them. And if you know anybody that's interested in trading with the firm, refer them to us, and we can definitely help them get on the right track. So, anyways, VIX is moving down. Looks like it wants to go back down towards 1350. Let's go and take a look at the triple Qs. The Nasdaq 100 ETF was up 90 cents today, up over 1%, making new 52-week highs. And again, since we've been talking about the Fibonacci's from the tech bubble sell-off, let me go ahead and bring over the monthly charts. And let's see here. The next targets for the Fibonacci levels is the 61% retracement, which is around 82.37. I'm pretty sure that level is going to get hit. Remember, this is the Fibonacci's from the tech bubble sell-off. Let me see. Let me go back to the right of my screen here. Let me take this back to a 20-year monthly chart. And you can see all I did was I took the high from 2000 and from the year 2000 to the low of 2002, and our Fibonacci 61.8 retracement is around 82.37. Pretty interesting that it matches up with the actual level that we had the breakdown right here from this little range. That's when the real momentum selling came in. So that's definitely an area that looks like it could get hit for the year. So if you are taking on some long-term to intermediate-term positions, make sure you take a look at the technology stocks. Make sure you take a look at the energy stocks that have been getting beaten down for the past couple of years, as they may start to catch a bid at some of these other sectors that are pretty hot right now. People really don't want to chase that performance. They'll probably start looking at some of these other names that have potential to make some nice alpha. All right, so let's take a look at the IWM. The Russell 2000 was up today, $1.33, up 1.25%, closing at 108.50, making new all-time highs. Again, this thing, you have a nice little bullish upward channel, as you guys can see here, and we're back above the 50% line of that channel. If we do get this little power move up that could come, this 112 target will be on the radar as a potential area to take some profit off of if we continue this nice little uptrend that we have from last Tuesday's low down there. Let me zoom in again for you guys, and you guys can see right here again. This will be the target up here towards 112. Those Russell 2000 stocks are definitely moving. I mean, the strongest sector we had today in the market was the financials. We had Bank of America up. You had Bank of America up 2.25%. Back above that $14 level, looking like it wants to go back up towards those highs. You have J.P. Morgan. They were up 3.25%. I believe they had some news come out today regarding that they paid off um, some of the litigation fees, or and the whole sector is looking bullish. So J.P. Morgan is even breaking past this key trend line that we've been watching right here, from connecting this little pivot high to these pivot highs right here. It acted as resistance earlier, so we broke past it today. J.P. Morgan looks like it wants to go back up towards 55, which was a level where we had the breakdown back here in mid-August. Goldman Sachs, all right, they have earnings coming out tomorrow. Should be before the bell. Yep, before the bell. And even the Goldman Sachs continues to trade this nice little trend right here. It's a nice little channel. All right, and if they were come out with good earnings, I would not be surprised if the stock maybe gaps up in this area up here somewhere and tries to make a run towards 170, towards the top of the channel all in one day. We'll see. If they report bad earnings and they gap down, I would definitely keep an eye on this bottom part of the channel right here to see if they try to bid it back right there. And then short-term support on the stock is around 158. So the financials are definitely looking pretty interesting. They were strong today. They have been kind of acting a little bit lackluster lately, but now they're picking up some momentum again as the market looks like it wants to continue trading back up to the highs on the S&P, and the other indices will continue to possibly make a new all-time or 52-week highs. Saw some good action in the healthcare as well. The biotechs, as you guys know, the biotech sector has been getting hit down for the past couple of days or so, and now they're catching a bit again. And you got Amgen. Amgen was up 1.25%. They have Pfizer, PFE. This one was up over 2% today. Pfizer looks to go higher. Make sure you keep this one on your radar. They have earnings coming out, and they have earnings coming out in about 2 weeks or so. Looks pretty good. Um, what are the stocks right here in the healthcare? Yeah, so overall, healthcare is looking pretty strong. We had some guys on the desk today trading GILD. This one looks pretty strong. Keep an eye on this one for a momentum move up tomorrow if you get some nice follow through. Energy stocks. Let's take a look at crude oil before we take a look at some of those energy stocks. Crude oil was not able to really catch a bid today. Pretty much closed flat. All right, it was down 21 cents today. You can see yesterday it closed at $100.92. Today it closed at $102.08. So from yesterday's close it was up, but from the session opening of the session it was not up that much there. I do like how it is holding around this 102.08 area. If you can get a nice bid above 102 or say 103 and then break over this 104 area, I would be looking for crude oil to make a move back up towards the 108, 110s, as we do have a breakout um, on the multi monthly charts here. Let me rephrase that. We do have a multi-month breakout over here on the weekly when it broke out over this 98 level. So that would be a good area for a back test. And it's also going to coincide with the back test of the triangle breakout from the monthly chart. So I do believe pretty soon this dip is going to be bought in crude oil. All right, I would think that the market continues to move higher. You know, it's only moving higher because people expect the economy to grow. So therefore, they're going to be, they're going to come back and try to buy some of this crude oil. That's my thinking behind it. Again, take it with a grain of salt if you want. Uh, I do like this 98 level down here, though. If it was to come down near 98, that would definitely be a good area, as that was the prior breakout level, and it should act as resistance if it was to touch there. So, anyways, back to the energy stocks. Take a look at CHK. CHK Chesapeake Energy. This thing looks like it wants to go higher after showing us some nice relative strength yesterday and pulling back to the lows. It had a nice little gap up today and took off. You can see it's trying to break and hold above this 2664 level, and it did make new 52-week highs today. Keep an eye on this name here. Again, we've been talking about the basic material sector and the energy stocks for the past couple weeks now, and now they're starting to catch a lift, or they're starting to pick up a little bit more momentum, I should say. DVN, Devon Energy, natural gas stock, moving to the top side. You can take a look at SWN catching a bid down there. LNG has been a name that I've talked about for the past couple weeks. This one continues to be a stellar performer ever since it broke out over this 33, 81, 34 area. This thing has been trending up. Another strong stock, the energy stock that was strong before. I haven't took a look at it lately, but Rex, REXX. Look at this one breaking out. Again, energy stocks are looking like they are back in play. The larger integrated energy companies, though, like the ExxonMobil and the Chevron, they're not really doing that well. It's more the smaller ones that are performing pretty well, or the natural gas ones. Let's see, PXD did pretty well today. This one was up 6%, high price stock. You also can take a look at NBL, Noble Energy. This one made a nice move today. This again, these energy stocks, guys, keep an eye on them. They should get some follow through, right? As they're now starting to pick up some momentum, and people are starting to shift do some sector rotation into some of these stocks here. Some of these fund managers are definitely looking for some of these stocks that have been underperforming, that are still good solid companies to maybe catch a bid if the market continues to go higher. So again, keep an eye on the sector. I did not get a chance to talk about gold. Let's go back and take a look at gold via the GLD first. Was down 19 cents today, down 0.15%. Not really getting any traction there. I usually look at the gold futures chart, so let me take a look at that. Again, the gold miners, they were strong yesterday. They did nothing today, pretty much flat. Gold continues to hold above yesterday's opening price, or I should say above this 1270 level. Which again, that looks to be a possible shakeout from this little bid that we dropped below yesterday, and then we also took out Friday's low. So this could be a little possible. This could be a possible a bear trap right here. We have this little trend line coming in right here. So keep an eye on gold. If it breaks back above 1300, look for the scene to possibly catch a bid back up. And this could possibly be a little short-term bottom. Again, we have to watch this commodity real close, as there could be a lot of opportunity for a nice little short-term pop to the top side. Again, we do not have that signal yet, so just be patient. What else? Let me take a look at copper. When I look at copper futures, copper was trading strong today as well, holding up pretty well. And if copper could really catch some, if copper can break above 340 or so, we'll have to start looking at this and, uh, you know, trying to see what is copper trying to tell us. All right, if copper breaks out, in other words, that could be telling us that people are expecting a lot of more growth in the economy, and there's global demand for copper, and that'll be bullish, of course, for global growth. And copper is always a commodity that people look at when they're trying to measure some type of growth going on, as it goes into a lot of products and things that we use, equipment, etc. And copper so far is holding pretty good. Holding pretty good. In general, it's really just trading in a big range between 340 and 305 right here. So we'll see if it gets over 340 and it gets back inside this little upward channel right here. This move up in copper could be giving us some good signs that things are possibly are shaping up, except for these clowns in Congress that can't get nothing done in a timely fashion. And if that's the case, you want to make sure you take a look at FCX, which has a breakout over 35. All right, which they have earnings coming out next Monday. You also want to take a look at SCCO. And is this one catching a bid? Let me take a look here. It's loading up right now. But overall, again, technology, the whole market was strong today. Yesterday, the broad market was weak. Today, the broad market strong. So again, we're having this back and forth tug of war action, all because again, what's going on over there in Washington. SCCO looks pretty interesting. Nice little expansion candle day right here. Then we have a little bull flag that's shaping up inside of the upper 1/3 or half, upper 50% range of this candle right here. And if you really look at it on the 6-minute time frame, you can see the flag much cleaner. But that's about it, guys. Hope you guys had a great day today. We'll have some more analysis in our chat room tomorrow morning. Make sure you come check it out, mywallstreettv.com. The password to log in is SMART, SMART. Make sure you share these videos. A lot of great analysis that I do here for you guys and for our traders and subscribers that come into our chat room. Have a great day, folks. Cheers. Channel Guy Trader signing out.